All right, what is up, tycoons? What's up, traders? Super excited for today's video. We are going to talk about the energy sector. We're going to take a look at ticker symbol USO, as well as some other very interesting charts. So make sure to smash that like button, subscribe to the channel, watch the whole video so you don't miss the really good charts. We're going to start off here talking about how some of the largest investors and most famous, Warren Buffett, BlackRock, and Goldman Sachs, they find energy stocks irresistible even as 2023 proves another turbulent year for markets. And energy stocks are emerging as a top favorite with Wall Street elites, even as the recent string of bank failures spook markets. Warren Buffett's Berkshire Hathaway spent nearly $500 million on Occidental Petroleum in just 3 days, guys. In just 3 days, dropped $500 million. BlackRock and Goldman Sachs have also touted their preference for energy stocks. More recently, the U.S. bank upgraded the European oil and gas giant Shell to a buy rating in February, predicting share gains of as much as 40%. There's a much greater share of earnings that are coming from energy as compared with its market weight, like 10% of earnings in the market and maybe 5% of market cap. So that has suggested that earnings are likely to be much higher there. And one sector is emerging as quite the favorite with the likes of Berkshire Hathaway, BlackRock, and Goldman Sachs. That's energy stocks. Warren Buffett's investment firm has been buying into Occidental Petroleum, last year's top performing stock in the S&P 500 index. Berkshire poured more than $11 billion into the firm in just over 12 months, with the latest purchases of $467 million reported this week. It also invested around $20 billion in Chevron last year. BlackRock, the world's biggest money manager, prefers energy stocks on the prospect that oil and gas prices could rise this year amid supply constraints. Strategist led by Wee Lee wrote in a published this week. Okay, now that we've kind of gone over that, we're going to start off here looking at the USO chart. And so there's a couple things that I want to highlight here, all right, that we have on the chart. We're going to zoom in a little bit later, but I just want to go over some of the key levels right now. So if we actually look at our MACD, our moving average convergence divergence, you can see that we're actually in an uptrend here, making higher lows. But meanwhile, at the same exact points, if you look on the chart, we have a low and then we have a lower low. So when you're creating these lower lows on the price action, but your indicator is making higher lows, all right, this would be known as a bullish divergence. So it's an indicator we could see some possible bullish activity in the future, right? It's not 100% guaranteed, but you can see that we also came down and tested this demand zone here that was previously a supply zone, right? So past supply, former supply turns into new demand. It's just like support and resistance. And you can see we actually had a very huge sharp sell-off and we came right down into this demand zone, consolidated, right? And this is known as a liquidity grab, right? So there's liquidity over here, right? And we can see markets push up and then they come back down into this liquidity area and push back up higher. Then we retest it again. They come back to the liquidity grab, pushes up higher, right? And it keeps doing that. And then we fell through, right? So we had to go to the next area of liquidity on USO. And once we did that, we came into this demand zone and we've already started to see a bounce. Now, this doesn't mean that we can't head back down, but it just shows that, essentially they were looking to grab liquidity and there was no more liquidity up here. And so now this is going to be a supply zone from a demand zone. All right, this overhead supply zone right in here, which is going to be roughly about $62 to about $63, okay, is our overhead supply zone on USO. And then we have a demand zone down here from about 55.46 all the way down to about 54, I would call it, okay? And you can see that that's, an area as well over here in the past. So if things do continue heading lower, I wouldn't really be surprised if they head down to this $55 to $54 region. It wouldn't surprise me, but we're starting to see some bullish signs and some bullish signals on the MACD. Now, recently we were very oversold, right? This is our RSI, our relative strength index, and you can see we crossed below that oversold threshold. And that's really why we're starting to see a bounce, is because we're oversold. We're bouncing off of oversold conditions. So with that being said, we're going to zoom in a little bit more now. All right, and take a look at our major resistance levels. So what we have here are the Fibonacci levels, and we use these because nothing moves in a straight line down or in a straight line up. Rather, you get a move down, retracement, continuation of the trend, or you can get a move up, retracement, continuation of the trend. So in order to get a reversal, we'd have to break through these retracement levels. So you can use them for trend continuation or trend reversals. If you move down, consolidate, and then break through those retracement levels, that would be an upside reversal. So we have our swing high, we have our swing low. All right, a healthy retracement would take us up to the 62.69, 64.18, and 65.68. All of those would be healthy retracements, and we could continue the trend lower and head down into our demand zone or even retest this demand zone that we're testing right now. Okay, but if we come up and we start to consolidate, retest this supply zone, right? Get a breakout retest of this supply zone, turn it back into demand and break through above our 61.8 level of 65.68, then we have the chance of coming to our breakout level here of 70.53. Okay, and above 70.53, we do have a small supply zone up here, right in about the 71.50 to about 72.25 area. So these are really all the key levels that's going to be relevant, for the next month, for the next couple months, maybe the next quarter. Just depends how long, if we consolidate through here, if we move quickly. But if we go on to the next slide, okay, and remember what we talked about in the beginning. Huge investors are bullish on energy, right? And so what we have here is actually XLE, the XLE XLK chart. And so when you see this go up, this means that energy is outperforming tech. And when you see this go down, this means that tech is outperforming energy. So here recently, since the start of the year, the stock market and specifically tech has been on a tremendous rally. But this is actually putting in a big cup and handle pattern, guys. If you take a look, we have a super clean cup and handle right now, and we're in the handle phase right now. So this could go lower, right? We could retest some of these areas down here. That's definitely possible, but we're going to see if this actually turns into a cup and handle. Right now, we have the cup, we have the handle forming. It's not confirmed. We would need a breakout to the upside. But it's very interesting how it's developing right now, and I can see why so many big investors would be big on energy. If you look at the next one, we have XLE divided by SPY, and this is a bullish count, okay? So essentially, markets like to move in 5-wave and 3-wave structures. And so, you can see here, even we have some supply zones, some areas of liquidity, right? And so we pushed up in this 5-wave structure into our overhead supply zone. All right, former demand, right? Demand here, and then that demand fell through and became supply once we came into those zones and we started pushing down. So, we had got our 5-wave structure, our 5-wave count up into this area of supply, and we're getting an ABC correction. So let me zoom in a little bit more, but essentially, your even wave numbers, like your even numbers, like your wave 2, okay, and your wave 4, these should be ABC's corrections, okay, meaning like a 3-wave count. And then your 5-wave structure is going to be the impulsive structure, right? Whether it's to the upside or downside. And in this case, we got a very clean 5-wave structure to the upside. Okay, we got our wave 1 right here, and then we got an ABC correction, right, for our wave 2, and then we got our wave 3 here, which wave 3 is typically the largest wave, and that kind of helps you, validate the structure and see how things are going. So, we got our wave 1 up, wave 2 down. That was an ABC correction, right? You see, we had the A down, B up, C down, and then we got our wave 3, and then we got another ABC correction. We had an A down, then we had a B up, and then we got a C down. And then we got our wave 5 into that overhead supply zone that I showed you guys. And we've started an ABC count to the downside, right? We got A, B, C. Now, this doesn't mean that it can't go lower, right? The C wave could extend. Remember, wave 3 is typically the biggest. So it definitely could go lower. That's definitely a possibility. But if we end up, putting in a 3-wave structure here and getting our ABC correction, then our next count would be another 5-wave structure, and it would look to take us, up here to about 0.34 on the XLE divided by SPY chart. Now, currently it's at about 0.20. So that's a pretty big increase, right? 14 over 20. It's like 70%, essentially is, the ratio there. All right. So, that's some of the main things that I'm looking at right now. Trying to really dive into the charts and see what the technicals are saying. Now, remember, this video is not financial advice, really just going over, what some of the big investors could possibly be seeing A lot of times they are looking at the fundamentals, and we mentioned some of the fundamentals, especially the market cap weight. They're getting about 10% of earnings, but they're only 5% of the actual market cap. So that suggests that, they could have good earnings heading into the future. And when we look at some of these charts, we are seeing some possible bullish formations forming here, right? We have the where is it? We have the XLE, XLK cup and handle trying to form right here. And then we have this XLE SPY, bullish count that we're going to be tracking. Now, of course, none of these are confirmed yet, but they are something that I'm going to be watching, and it's going to be really interesting to see if they play out. This could mean, a really big investment opportunity, and a lot of people could be getting into a big bull trap, trying to invest in the tech market after these really, really big rallies. So, as always, do your own research, dive into things a little bit deeper, stay safe out there, and smash the like button, subscribe to the channel.